Hi there, Serial Trader here. Let's check in with the major US indices. And potentially we found a bottom for this small wave 4. And we may have been starting the initial advance in what would be best labeled right now as a small wave 5 of a larger 3. Um, so I actually did do a position here today, just a real short term one, and I'll get to that in a moment. But I'll just point out right now, after hours, we're dumping, well, not dumping, we're declining on the S&P futures. So comparative to the cash index, it's making a new low overnight in the futures. But whether that actually transfers over tomorrow when we have real trading remains to be seen. From my experience, you should take what happens overnight in the futures with a grain of salt until you're given a reason not to by having it confirmed the next day. And what I mean by that is even if we have a weak open tomorrow to reflect the downside in the futures here, before you get too excited about further downside. And by the way, this still looks very choppy and corrective, even if it does go down farther. So it's still corrective in my opinion if it goes farther. But what I'm getting at is if we have a neutral or strong close tomorrow, despite having a weak open, that greatly negates the significance of this overnight action in the futures. Remember, overnight the liquidity on these S&P futures is extremely low in comparison. So you're not getting the overall crowd's opinion of what price should be, in my opinion, in most cases when you have big overnight moves. But just keep that in mind. So yeah, still favoring this interpretation. Now let's go to the Thinkorswim platform, and I'll just highlight some actual trading that I did today. Very short term in nature. And actually, this is the 10-minute chart. I was actually mostly using the 1-minute chart alongside the 10-minute. And this is SPY. So it's the ETF of the S&P 500. Okay. And let's just pull this up to my satisfaction here. Sure, that should be good. So what we had, hang on. Ah, that should work. So this was the, that gap down from yesterday's close to today's open. So we opened quite a bit lower today. Found a bottom. Now I wasn't making any moves here because I don't pick bottoms. That's not a very good strategy from my experience. But I waited for this. So we had an initial move up. We had a corrective looking decline. And just let me point out, at this point, I start doing some analysis with the wave relationship. So okay, I'm thinking maybe we have a small impulse wave up in one. In which case, maybe we have a corrective decline in wave 2. Okay, if it is going to be a small impulse wave. So let's get in on that. And look, we just came right between the, just past the 50% retracement and rejected off there nicely. So I'm like, okay, that's looking good so far. But I'm still not going to trust it, especially on this time frame. So I get rid of that. And then I'm like, okay, if that's a 2, there should be a 3. And then what do we have? A 1, 2, 3, 4, 5. So that counts complete as 5, 4, 3. And then, okay, after 3 is complete, here I'm still just waiting and watching. I haven't made any moves yet. This involves a certain level of patience and discipline. And then I say, well, after a 3, there should be a 4 that does not overlap 1. And more ideally, has a not too deep of a percentage retracement in most cases. So I do my Fibonacci retracement off of 3. Okay, and then what do we get? Well, let's have a look here. What we get is a basically a 50% retracement. Now at this point, I start entering positions somewhere in this area and in this area. And then again, when we dip down one more time in this area, in anticipation that we'd have a 5th move up, okay, to at least take out this high, which on SPY was Oh, 276.59. Okay. Now what I did is I dollar cost averaged in, and well, let me just go back to the 10-minute chart just to give this a more compact look. And so I dollar cost averaged in, near the end of wave 4. Again, not perfectly calling a bottom, but that's why you buy it in separate orders, because who are you to say that that was the perfect entry? Usually it's not. I mean, once in a while you get really lucky and nail a bottom or a top, but I'll tell you that's not a consistent thing. So for better consistent results, it's best to average in multiple orders, and that's what I did. So let's actually go over to my filled orders. So I bought the 274 strike calls, very short term. They actually expire this coming Friday, so they're just weeklies. And I bought 15 of them at the 270 price, 270 per share per contract. I bought 15 of them at 278, and then I bought 15 of them at 3, and that was my worst entry, and I think that might have been my first entry as well. But then of course I brought my average price down nicely with those other 2 orders, and then I sold them for a net price of 296. Okay, and that netted me well, let's see on SPY here, my 274 calls weeklies, my profit for the day was $600 US. Okay, so it was a nice little $600, just a quick day trade, and really just an example of using the Elliott wave principle the same way I would use it on a weekly or a daily chart, but in this case I was using a 1 minute and a 10-minute chart. And again, a good example of how you're trading the pattern and not the wave count. Now, where this little 5-wave structure fits in, big picture to this overall decline and the previous advance, that is certainly up for debate, especially until we get more price action. And that's what you would call the wave count, basically the pattern's orientation within a larger structure, okay? But the pattern itself, okay, so going back to that 1 minute chart, the pattern itself really is not up for debate. And what I mean by that is if you have an impulse wave on a 1 minute price chart, followed by a corrective zigzag, for instance, there's no debating that the next move, okay, is going to be another 5-wave advance. Now, whether it's going to be a C wave or a third wave remains to be seen, but nonetheless, you're going to have an advance that takes out the high of the previous impulse wave, and then after that, you will determine by its structure and its relationship to the first wave whether it is a 3 or a C to the A, okay? In this case, it's a 3 to the 1. And at that point, now that you have a 3, you have one of the highest confidence entries you can get, and that's the 4th wave, because now there's so much data that had to happen, and so many relationships and visual, geometries that had to happen to determine that, okay, now I'm expecting a 4th wave. And the 4th wave is one of the highest confidence trade setups because, again, it takes so much. You need that 3rd wave, which is very, very clear. The 3rd waves are always, really long and powerful. You need that information to actually come to the determination that, okay, now a 4th wave is underway. And then, of course, as the 4th wave starts developing, it's quite shallow and choppy, and it's not sharp in most cases. Typical 4th wave. It can be. Remember, if wave 2 was kind of more sideways, wave 4 tends to be more sharp. It's kind of a guideline of alternation, it's called. But in this case, the 4th was very choppy, meandering, and it's exaggerated on this 1 minute price chart, obviously. And then expecting a 5th at a minimum to make new highs. Now, the thing is, I'll go back to the 10 minute again just to shrink this down a bit. It's not that I exited at the top either. I didn't enter at the bottom, although overall my average price was definitely at the lower end of the range of wave 4. And I did not exit at the top of wave 5 here. In fact, I exited somewhere in this area before we even made a new extreme above 3. And that's because I'd rather be out early than have it briefly go above and then just come, crashing down in a short-term corrective wave. And, maybe the initial wave A just comes crashing down in that first corrective wave down. You got to be quicker to pull the trigger when you're dealing with 1 minute and 10-minute price charts. So that was good enough for me, getting you know, almost to a new high, being up $600 in, I mean, it was really a matter of minutes, not even hours really. I was quite satisfied with that. That's what I consider a successful trade. You know, it's like I don't know, kind of how I like to deal with parties. I like to arrive fashionably late and leave before you know, the police come, leave before trouble starts happening. And you know, an analogy is just obviously not quite entering at the bottom, so arriving a little bit late, but with some evidence that there is some bottoming action, and then leaving before trying to wait for that top, because sometimes the top picks itself and then doesn't give you much time to get out afterwards. Again, especially on these shorter term time frames. This is day trading, intraday trading. It's almost scalping. Scalping might be a little quicker than this, but it's close. So again, you wouldn't be nearly as hasty on, you know, a swing trade or a position trade or an investment. Certainly, for that matter, an investment to me just means a trade that, you know, you're looking at for multiple months or years or whatever. Everything's a trade, really, in my opinion. But yeah, just I'd highlight that. Just a real world example of, you know, using my you know, preferred system just in a very short period of time. And again, my trading plan, it's always the same. I look for the same kinds of patterns and then complementary technicals along with those patterns. And I really have the same process, but you know, I can apply it to different time frames. And today was just an example of a quick trade, but still using the same kind of system. So with that being said, I'll just I'll get off of this page here. Hopefully that didn't bore you too much, but I just thought it might be interesting. And we'll go to, well, here, let me clean this up too. We'll go with the SPX chart daily. Just do our regular market analysis here. So SPX, again, we were quite low early in the day, and then we had a significant recovery, decent lower shadow on this candlestick, and then closing near the high of the day. And basically just closing right on the T line. So not a candlestick buy signal per se, but certainly a strong day of trading. And again, T line holding as support here on a closing basis. So that's reasonably positive. And that's notwithstanding the overnight action in the futures I mentioned before. We'll see how that actually impacts tomorrow. I have my doubts as to its significance until we see tomorrow's close. You know, possibly a weak open and then, you know, a good recovery into the close. That's kind of what I'm thinking, but we'll see. So that's SPX. Let's go to the Dow Jones Industrial Average. Now the Dow continues to just be the weakest of these three indices that I'm watching. But the Dow had its own kind of bullish hammer today. And mind you, it's below the T line and the 3T line. And the 3T line's crossing below the T line. So Dow is the weakest looking one, but nonetheless, it still recovered from its lows of the day and put in a bullish hammer. So that will have to be confirmed with some positive trading, at least by the close of tomorrow, or else the Dow could see some further weakness. Okay, and let's go to the NASDAQ composite. And the NASDAQ continues to show strength here. And again, I was mentioning you know, the potential for you know, a bear trade on the NASDAQ, and that potential remains, but not until we see a sell signal and a close below the T line, and we're not seeing that yet. In fact, we actually, no, I don't think we quite saw a bullish engulfing. Let me see. Yesterday's open, or sorry, yesterday's close, 77.46.38. What did we close at today? 77.47.03. Well, you know what? This is actually ever so slightly a legitimate bullish engulfing candlestick, because we opened below yesterday's open and closed just slightly above yesterday's close. So we engulfed the prior real body, albeit very slightly. So technically a buy signal today on the NASDAQ, and again strongly above the T line and actually still above the 3T line on a closing basis. So NASDAQ might still have some upward juice left in it before we're going to see a sell signal, and potentially, like I was mentioning last video, look at some QQQ puts or something of that nature. for what I expect to at least be a reasonable correction, if not something more substantial. But again, we won't know until it actually shows itself. Okay, so that's the NASDAQ. Definitely showing relative strength still to the other two indexes. Okay, the volatility index. Again, VIX just really flaccid. And as long as VIX remains in this relatively calm state, that is a bullish condition for stocks. So that's just something to continue watching here. And I'm still eyeing up the potential to buy some VIX calls, but I want to at least start to see something on that NASDAQ, like, just a daily sell signal or something. And then maybe I'll buy some VIX calls in anticipation of higher volatility afterwards. But still nothing yet as far as taking action on it. So that should be good for today, for this market. Hopefully that was interesting or helpful for someone. Alright, Serial Trader signing off.